So it did say expert, but had this little conversation earlier. I don't think there are any experts out there at the moment. Things are changing regularly, and it's trying to keep up to date with that and try and make sure that we're doing everything that we can to enable our clients and obviously help you guys to try and get what's out there. So we'll have a little run through what I'm going to go through, and hopefully you'll get something out of it that will be helpful. So going to have a little talk through briefly on the grant funding that's out there at the moment. Then we're going to be looking at the Coronavirus Business Interruption Loan Scheme, CBILS, and what information requirements there might be for application and what we've seen to date so far. And then have a little chat about what we know to date on bounce back loans, which was the new thing that was released this week. So grant funding, we've got the Small Business Grant Fund, which a lot of our clients have started to receive now. So this is where you have, where it's all based on your rates and whether you have small business rate relief. So if you have small business rate relief, so you don't essentially pay any rates, then you have a ability to claim £10,000. Now this is an amount of money that actually for the smaller businesses makes quite a lot of difference. So that £10,000 comes into your bank account and gets treated as income. So it is taxable later date, but it's essentially another amount of income that comes into your business and can assist you. So some of the smaller businesses who aren't able to trade, talking about one of my clients, hairdresser, can't trade at the moment, had small business rate relief on their premises that they were using, and that 10,000 has come into their business and has made a big difference for them as an individual, running a limited company. So, no other income at all, but that helps with covering some of the costs during this period. That grant is then extended for retail and hospitality and leisure, and those grants increase to 25,000 if your rateable value is between 15,000 and 51,000. But you have to be in retail, hospitality or leisure. And retail, I had a client who they sell processed chicken, and they sell it wholesale mainly, but also a bit of retail. Local people come in and collecting, big butchers, etc. And they went for this grant, and they didn't get the grant. There has to be almost like a shop on the premises to enable it to happen. So although they sell from the door, they had to prove that they were in a position where they were essentially taking payment over a counter almost. So they are being fairly strict on it, and making the payment out of these 25,000s. So people are receiving it, but it's taking a little bit longer for that. Whereas the 10,000 grants, you go onto the local authority websites, you're able to make the claim and people have received their money now. So hopefully people have had that experience. And the money's come in quickly, and it's obviously a real help for some of the smaller businesses. So following this, it will be worth you guys having a look on our website, which has got a lot of the information there, which you'll be able to access and look through, and also ask questions if necessary following this. So, but some of the if you qualify for that, it comes straight in. So that's good. CBILS, I know Tony's on the call, so he'll probably correct me later on. That'll be interesting. the CBILS loans, things have changed on that dramatically. So the CBILS loans is essentially a business interruption loan. The whole idea of this loan is to enable businesses to trade through this period, or if they can trade, or cover their outgoings through this period to enable the businesses to start again once we get to whatever the new normal is. We want to have a hot start. We want to be able, we want the businesses to be able to go and start trading without any worry about, well, they're going to have worry about cash positions, but we want them to be able to go without having all the conversations that a business owner has to have conversations with their suppliers and how we can't pay this, and you're juggling money around. That stops people concentrating on the trade, and that's what you need to do, concentrating on picking up that business again and converting that business into cash. The trouble is working capital will be depleted. Businesses that have run their business well will be depleting their working capital over this period of time. Businesses that haven't run their businesses quite so well, haven't got working capital, are the ones that will, be in a position where they're more likely to fail now. This is a hard market. It's a hard place. I was talking to the guys earlier that, up 26 years or whatever it is, I've been an accountant. This is the last 3 weeks have probably been the hardest 3 weeks that I've seen. We run a business too, but talking to all our business owners, it's very difficult, and it's the unknown that's the hardest thing. We all know that. That's the same in business as a business owner. The unknown, you try and put things in place to limit the impact of the unknown. But that is the thing that's causing the problems at the moment. We don't know what's going to happen, and when you don't know what's going to happen, it's hard to plan for the future. So this business interruption loan scheme is there to try to support a business during this time. It's obviously a loan that you can take. There's no upfront charges, and there's no charges for the first 12 months. That's the important thing. That's money into your business that you don't have to repay at this moment. It is fully repayable by you as a business, and that repayment would start within 12 months' time, and there will be interest charged on that loan when you get past the 12 months and start to repay. Although you could repay early. So if you took the loan, didn't use it, or didn't use all of it, you could repay part of it, and then obviously the interest will only be on the further part. So a few of the details or the main sort of key features. The loan can be up to 5 million. However, the likelihood is that most of the loans that are claimed for the smaller businesses will be up to 250,000. The reason that it will be up to 250,000 is because that is where there will be no personal guarantees in any form for those facilities. Previously, when it first came out, or the news first came out, there was still, it was at the lender's discretion. But now any facility under 250,000, no personal guarantees will be required. And any facility over 250,000, there might be some personal guarantees required, and that's at the lender's discretion. And we're finding that they're still asking for that at the moment. But that guarantee is capped to 20% of the any outstanding balance after the proceeds from any assets might have been applied, if you got to a stage where you couldn't repay that. But the personal guarantees can't be on your principal private residence. So protecting the family home, which is obviously massively important. The borrower remains 100% liable for the debt. So you, as your business, if you're a limited company, it will be the company that remains 100% liable for the debt. But the actual guarantee of the CBILS loan, so the payment is to the lender, so from the government. So the lender, they can't get the payment in the normal way. The remaining money comes from the government to the lender, and that covers the balance. So the scheme itself was initially set to run for 6 months. That's still the case at the moment, as far as I'm aware. So you don't have to take this loan now. It could be taken later if the experience of the whole situation is worse than you might have initially thought. So I suppose it's worth talking about what information is needed, or certainly is requested, or the things that you should probably be thinking about, not just for this loan, but for, you know, business continuity as a whole. So, I mean, really, the information that's been asked by the banks in the past, and I'll come to a bit of a change that they're making from now, essentially, but in the past, the information that they've been asked for is really questions that you need to ask yourself for how you continue in the future. So the first sort of thing they're asking is how your business has been disrupted. So that might be supply. So are you not being able to get any supplies for the work that you're doing? Has demand fallen off? So your customer base has disappeared for whatever reason. You know, they're all on lockdown, and the nature of your business means that, you know, there is no work for you. Your staff, whether they're ill, whether they're suffering with the virus themselves, or whether they can't work because they are they've got dependents at home that are at high risk, or whether there's no ability for them to work at home, there's no IT, etc., or is it something else that's affected your business? They're then sort of looking for what the expected income is during that disruption period. For some people that's zero, but some people, and what's, you know, one of the positive things that we're seeing out of this at the moment is that entrepreneurs find a way. And that's the fantastic thing. You know, I'm talking to lots of clients at the moment, and you know, the ones that are entrepreneurial, and they're finding a way of thinking of what they can do, what else can they do that allows them to generate some business. And that's a real, you know, it's something that it's in your DNA almost, being an entrepreneur. They find some other ways of doing things that'll generate income, and so that could be part of the forecast, but also but mainly it's about the main business and what that business is going to achieve during this time. Then you've got to think about what are the essential costs during that period. What have you done to minimise those costs? They'll expect you to look at the government support schemes, the loans. Have you delayed your VAT? So the VAT periods, February, March and April periods. Have you delayed, March, April, May periods, have you delayed that VAT to be paid 31st of March next year? That is a form of finance. Obviously, it's got to be repaid in March next year, but it gives you a little bit of breathing space. So a number of businesses actually where their periods have ended have tried to raise invoices at that time to delay further VAT. So have those been taken up? Have you some of the grants we were talking about earlier, have those been claimed? have you looked to reduce costs wherever possible? Have you spoken to your landlord to see whether there's any chance of reducing your rent or taking a rent holiday? Have you thought about this, your staff, obviously furloughing people and job retention scheme? I've taken a deep breath there because that's a real challenge at the moment. All the calculations around that. Have you, for other people who are working, have you reduced their salaries? Have you thought about postponing pay rises, bonus reduction, all these things that are allowing the business to continue, which is massively important? Have you spoke to certain suppliers who might be able to increase credit terms depending on where you are, or it's just having those conversations, seeing what you can do to reduce your outgoings, and then letting the bank know that you're doing those things. Are there any funds that could be introduced to the business? That's not from yourself, but there might be assets that are no longer going to be used, or in the new normal you might not require those types of assets. So transport company, for example, they're looking forward, and they don't think they need one of their Arctic lorries, and they've got a payment for it, and these are worth a lot of money, and they've got a sale, and they're able to sell that and generate a little bit of additional income for an asset that they're not going to be expecting to use into the future. And then it's thinking about when the level of trade changes post COVID-19. So what's the expected time frame for that, for it to return to previous levels? Well, who knows, but maybe that's 6 months down the road and you think things are going to get back to normal. And that's what they're expecting you to think about, and that's what you should be expecting to think about. How long is this period of losses for most people, whether it be losses cash or losses financial, and eventually they become the same thing. So that's what you've got to think about. And all those things that you're thinking about, the banks are expecting you to put that into a forecast, or they certainly have been. So they were expecting a forecast for the 6 month time frame, essentially for the disruption period, before you go back to normal. And then they're expecting you to show all your cost cutting measures, and they should be reflected in the forecast. And they're expecting you to forecast to cover a minimum 12 months post that impact period. So and then just describe your assumptions about the ongoing trade. So whether it will be positively, for some people, hopefully, it might be positively affected, but I expect for most it will be negatively affected post the COVID impact period. So it might not return to normal. It might be 90%, 80% to normal. But that's what they were expecting in the forecast to see. And then a detailed commentary around those forecasts, talking about some of the major assumptions that are being made, and bearing in mind there are a lot of assumptions that need to be made in this, because we don't know. So the other thing that you'd be expected to supply is up-to-date accounts and management information as far as possible. Some of that can be, extracted from your financial accounts package. Most people have electronic accounts packages now. Not everybody, but most do, enabling you to extract some kind of balance sheet and profit and loss, and that's kind of what was expected. So the reason I say that's what was expected, because very recently, I think 2 days ago, there was a joint statement with the 7 largest SME lenders and UK finance, where they proclaimed this, and this is a quotation: following the changes to the scheme announced today, which was this bounce back loan, which we'll talk about, lenders will only ask businesses for information and data they might reasonably be able to provide at speed. and will not require the provision of forward-looking financial information or business plans from businesses applying for CBILS-backed lending, relying instead on our own information to assess credit and business viability. So that is a huge change. We haven't had any of the bank managers speak to us about that yet, but the main business banks, what we're saying, this is for loans up to 250,000. They're now saying that they might not need forecasts. So if your business has been performing well, if your business has has management accounts, if your business are up to date, if your business has financial accounts which have been prepared in the normal times, then the expectation now is that the loan, you will be able to make an application for a loan of 250,000 and not have to provide forward forecasts. So that is new, but for some people that's a massively important bit of information. The reason I say that is it costs money to put forecasts together. Putting forecasts together, as I say, in an environment where, well, what do we know? If our advice right from the start was, if you were making a CBILS loan, to stay with a lender with the bank that you're transacting with, because they've got your information, and this is essentially stating exactly the same. So if your bank has the information, if you've been with your bank for a few years, they'll have the information. They'll know whether you're profitable. They'll know what your bank balances sit at, and if they feel that's at a level that from their mind they get comfort from, that's what they're trying to say, is that they will be able to get a loan through significantly faster. We haven't seen huge amounts of loans being provided to our clients. We have seen loans, but what's happening is there's so many applications out there at the moment. Tony, you will know this, but there's so many applications out there at the moment, and the bank managers are having to deal with those applications. If you think that all the information that I've just spoken about that you have to prepare and go through and put together, that information is voluminous. And so talking to a couple of the bank managers, local ones, one of them had sort of 35 applications in place. He estimated that it took 5 to 6 hours to go through that application to get it to their underwriters. Okay, so that's pretty much a day. It's got over 30 days. So it's been, he has to prioritize. He has to prioritize people that need money now, because they've got nothing, they can't pay their way, they can't continue. People who've run their business well, built up a bit of fat in their business, they don't need that money immediately. So they're kind of getting pushed to the back of the list. It's not on a first come first serve basis, because it's on a requirement for funding basis. That's what we're being told is happening at the moment. So anything like this that can push it forward faster, I'm expecting them to be letting us know that this is what they're going to be doing. I think that won't happen until next week, that they'll start to talk about that. And the reason that will be next week will be because of the bounce back loans. So the bounce back loans got announced, and the bounce back loans are essentially, are going to launch on the 4th of May, which is Monday. So 27th of April was when it got announced. So 4 days ago now, 4 days, whatever the date is today, 4 days ago, I think. And that's for loans between 2,000 and 50,000. And it will be provided in a similar way. There won't be any fees or interest to pay for the first 12 months. But this one, the government will guarantee 100% of the loan rather than 80%. And that makes that a lot quicker to go through. Loan terms will be up to 6 years, no repayments for the first 12 months. And they're working, and the government are saying that they're working with the lenders to agree a low rate of interest for the remaining period of the loan. So interest charges on CBILS loans, previously, we're finding that they're coming out around 3.5–4%, something like that. But it does depend on risk. So interest charges aren't always the same. But anyway, so this bounce back loan, if you're based in the UK, being negatively affected by coronavirus, and you were not an undertaking in difficulty on the 31st of December, that's the date that they've set for that. So if your business was looking okay at the 31st of December, then you might be able to get this loan. What they're trying to do, or what we've heard that they're trying to do, is this could be an online application, and you could get this loan and the application within 48 hours. I'm not saying that the money will come in before that. It won't, I expect, but the likelihood is that, well, it's still with the lenders, so that's still with the normal lenders, but the application could be dealt with within 48 hours. So that's up to 50,000. And for some, and some of the conversations I'm having with my clients, that could be quite attractive. Something quicker, 50,000. Well, that might be enough for them to get through the period with no upfront costs, and because we want the business to run, and but affordability is massive. If you're taking significant loan, you do have to pay it back, and that's the challenge for a lot of people. It's, we want the business to go, but do I want to be straddled? Does the business want to be straddled with additional debt? Well, 50,000 is a level that for lots of small businesses that might be the cash injection needed to support some outgoings for a number of months. So that could be a positive. Interestingly, on the back of that, and on the back of the bounce back loans, but also on the back of what the main 7 lenders, banks have said about the CBILS side of things, Funding Circle have entered the market with these loans too. So the Funding Circle are saying something very similar to, let me see, I've got this somewhere. Where is it? Excuse me, sorry for a second. So the Funding Circle are saying something similar to the to what the banks are saying about the loans themselves, that they can facilitate some funding too, and for loans under 250,000, and with past performance just being the criteria. So again, not having to provide forecasts going forward, where alternative financiers who have been approved under the scheme have been asking in a very similar way to the bank. So Funding Circle, the first ones that I know of, Tony might know others that have come in and now saying that they're going to look at past performance being the criteria for the CBILS loans. However, we do think that the cost of that finance later, so it still follows the same rules, higher. The first 12 months, no repayments and no interest. But after the 12 months is completed, we're expecting higher finance charges. And in fact, it's been capped at 9%. So you might expect that the interest charges are likely to be 9%, but we'll see. That's where it's being capped. So you might find that the financing later is harder, but you might find that it's easier to get the loan earlier. So we have a funding team internally, and we've got access to some finance portals allowing us to allowing us to look at various things like that. Tony does something very similar. And I think, and it'll be interesting to hear, from Tony in a bit, to see if that's something similar that he's feeling. But it feels like, I think some of the other lenders might follow suit, and do the same thing, making it slightly easier to potentially get it across the line. Because this is what it's about getting the money sooner rather than later. So some of these changes, and this is why I say no one's an expert, because it's changing so quickly. So you've probably got, if you think about it, maybe 75% less work to do now to get a loan application into position for loans up to 250,000. I mean, as I said earlier, I do think that everybody should still think about those things that they've been asked to do. The reason that they've been asked to do it is to fundamentally themselves see whether your business is in a position to trade forward, and that's what you need to know. And you need to understand yourself, and you need to understand where your crisis points are, your crunch points are, or the periods of danger, of which there are likely to be quite a few at this moment. So you need to understand whether if you do make a claim for 50,000, or you make a claim for 100 or 250,000, that you're going to, one, be able to repay it, but two, that is actually enough. It's enough to get you through. And there will be some businesses where it isn't, and they can't, and the businesses will fail. It's not a nice message, but it's true. But the entrepreneurs will still be there, and we'll have new businesses being created, and people starting again, but in a different form. So, but we want businesses to survive, because when businesses survive, they pay their way, they pay their bills, which means that helps other businesses survive. Because what we're finding at the moment is, people are finding it difficult to get payments for work that they've done in the past still, and that's a real challenge. But if you don't get paid, then how do you pay who you owe? So we're in business, and we're competing. Some of us are working closely together, but we all need to pay our way, because that's what keeps the other businesses going. It's I nearly said circle of life then. Oh my God. This is what happens when you're working from home and you get the Lion King coming on every 5 seconds. So, but essentially that is true. We're all working together in a business environment, and hopefully we're going to be able to pay our way, helping other people pay their way. I think just wondering whether I had anything else to say on that. Yeah, I think from a bank's point of view, I think it's really important that we understand the work that the bank managers, etc., are doing. They've got a bad reputation, but these are people who are trying to help their clients out without a shadow of a doubt. Anybody who thinks that, especially the local bank managers that I know, they're trying to help their clients out. They're under a huge amount of pressure. Some people have businesses that there's no work for them to do, and the business owners have more time than they've ever had in their entire lives, whereas bank managers are totally the opposite. They have an incredible amount of work to do, trying to get things across the line under high pressure. There's anything like some of the things that we've had with regards to all the JRS claims and things we've been doing for our clients. Everybody wants it, and there's, you'll get an email, and then 5 minutes later you get another email asking, has it been done yet? Has it been done? It's similar for the banks. So there needs to be good communication from the managers, bank managers, absolutely, but there also needs to be consideration of the amount of work that's got to go through to get this done, and the time that it's taking, because these guys are, I don't know, 20% busier than they've ever been, maybe more. Whereas some people are less busy than they've ever been. So it's like a big change in circumstances. So I'm not saying I'll feel sorry for them. I'm just saying it's like anything. We're all in a different spot. We're working from home, various different homes, various different places that we're able to do our business from. And you know, it's hard. And everybody's in a similar boat, but some people's workloads have increased exponentially, and some people's haven't. So it's just about understanding that a little bit, and making sure that when information is supplied, it's supplied in the format that it's been asked, and that will help things. Help grease the cogs and move things forward as fast as possible. So I've done a bit of a whistle stop. So as I say, have a look at the website. There's some great information around in various places. Obviously, we've tried to put together a hub of information about all the various things that are available to businesses and individuals. And hopefully with various sort of support pages behind it as well, headline stuff and then detail behind it. So worth having a little look at that and using it. There is some great information out there. The British Business Bank has a really good website with some frequently asked questions on CBILS and things that's been regularly updated as well. So yeah, have a look around. It's sensible. The reason I say come to our website is just because it's putting things all in one place, and just makes it easier to see. I'm not saying that you know we've got all the answers or all the information, but certainly something that's been updated daily, and just trying to keep our clients and contacts a little bit on top of what's happening. And when someone asks me a question, the good thing is I've got a brilliant support team of intelligent people behind me who help me answer those questions. So don't give me any difficult ones now, because they're not sitting here. I've got a picture that my daughter, when she was 1, drew. She's 11 now, and that's sitting up there. It's not a Jackson Pollock, so don't get excited.
Thank you, Charlie, for your update. Does anyone have any questions they'd like to put